What's up, guys? This is going to be a quick breakdown of the pair GBPJPY, GJ, of how to analyze a pair, right? Just a quick breakdown of how to analyze any pair, any Forex pair. So we're going to get straight into it. You can see, starting off on the daily, he's going to keep things simple, right? So the first thing is we try to find the zones. So I'm trying to look for two key points. Number one is the top point, the top key point, and then number two is a bottom key point. And then the things in between, we're gonna figure them out as we go. But the first two, that's what we need to find. So we need to analyze right here. That's the top key point made on September 1st, 2020. So let me show you guys what I do. Daily high made on September, what day was this? September 1st, 2020, right? And then we look for our lowest pair, our lowest key point, right? And when we do this, we could go back and see the charts, but since there is already a high point and a low point, we can just start from here, right? So right here, this is a low point. And do the same thing, do daily. So daily low made on September 22nd. So once we have found the top, the key point, and then the low key point, as I said before, we're gonna figure out what's going in between, right? So now we're gonna do the middle. So, but before we do that, let's just scroll back a little bit and see what has been happening, right? So we can have a better understanding. So we can see that it has been an uptrend and it's still an uptrend. So I'm not gonna mark this down, but just to give you guys an idea that this is going uptrend, we just do this. All right. Okay, so it's just a trend line. Let's go on the uptrend, right? So what we will be looking is buy fibs, so long positions. We're not looking for sell positions at this moment. So to do this, we just get our fib retracement. We start from the bottom point and then to the high key point, right, which was made right here. So we do that. Then once we have that, we try to look for our inner circle, right? Like our key points in between the key points. So the middle point will be the 50%. We can just put a line there. I'll just put a rectangle here just to show you guys. All right, and then the next two we need to find is the 25 and the 70, right? So the 25 is right here. We just mark it like this. 25%. And then the 70%, we'll just mark it the same as the 25. 70%. So from here on, let's just say this did not happen, right? Let's just say this did not happen. So what we'll be looking for is if the market made the high point and the bottom point, we have drawn the 50%, the 70%, and the 25%. So we have gotten three things in between the high point and the low point, right? Three things in there. So once we do that, we just wait for the candles to go above, right? And then come down, hit the 70. And you can get in a position right here. And you can be targeting the 38.2 for the first take profit, right? So we just see how that would have played out. And boom, it got smashed. First take profit. It wasn't as soon as you got in and you figured out this was a low point and it made a reversal here. And if you put in your fib from the bottom to the high point, you could see that it came on to 70, went straight into profit, and then there was a low drawdown, hit the 50% straight into profit, and then it was just consolidating here for a little bit, came down a little drawdown, and then it went straight up to the first take profit and just wicked second take profit, right? 25%. So that would have been one position, right? And then that would have played out good. You won. And let's just exit this real quick. So you would have got out right here, right? You would have got out right here. Sorry, right here. First take profit. Or if you want to get into another position, then you can just scale in from here. So where we're at is right here right now. And the market is closed, but today is Saturday, December 5th, if I'm not mistaken. Yeah, so right here, we're here right now. What we're gonna do is go on the lower time frames, like 30 minute. This is a 1 hour anyways, but we'll go on the 30 minute, right, just to get the finer details. So again, that's still pushing up, and we did expect it to hit the daily high made on September 1st, 2020, right? Because it's still pushing up. But it has to cross this 25, no, sorry. But it has to cross this high point it made right here. Right? Made this point, and then dropped. So right here, the 25% must be a strong rejection zone, right? Because it's been trying to pass it, but has not passed it. It's been trying to pass it since December 1st, but passed it on December 4th and came right back down. So it's a strong resistance point right here. You can even mark it like this. But since this point pushed up and pushed through the resistance point and it broke down, it's still resistance at this point. It did crack above it, but it did not continue to do this move, right? So we're gonna trap it again. Right here. The high point and the top point, right? We already found out the bigger time frame, high point, top point. Now we're zooming into smaller time frames. So once we do that, we try to lower our high point and low point as well. So we have found these right here, top, bottom. And I told y'all drop from the body of the wick to drop from the body right here to the bottom of the wick. So once we do that right here, you could say it came up, hit this resistance, came down to support, right? So right now, it's just a waiting game. Again, with Forex, you're not just gonna open the charts and find perfect entries every single time. Sometimes it's just gonna be consolidating and you're like, do I get in, do I not? And there'll be days you don't even trade, right? I'm sure you guys have heard that a lot of times. But, so right now, I would say I would wait, but again, I'm still looking for a push up, right? So one zone that I would say it might come down and hit will be this right here. Maybe come down and bounce off this because of all this wicks made right here. Or it might just shoot straight down from here, hit this, consolidate a little bit, come up past this zone, and just go straight up, and then, you know, retest this level and go up. So it may do that, or it may just do what it's doing right now and then come test this zone and go straight up. But from here, it's just a waiting game. We just wait and see. But we have already captured it. You can see. Let me go back. One key thing I can tell you guys is anytime you see a push like this in the market, like a clean push like this in the market, like long white candles or whatever candles you have for going up, a clean push like that is bound to come back and test a level, right? So if you say what level would it come down and test, we can even do it like this. Let me just take this off, quickly tell you guys it broke what zone, right? Right here was the bottom, and right here was the top. Again, it was consolidating in between. It just wicked up, came down, it almost hit this right here, right? Almost hit this, and then went up. But from here, it just straight up broke through it and then came down to this level, another level, right? So once it did that, what we look for is fibs of which leg did it break the market structure of, right? Which leg broke the resistance and kept going up. So I would say it broke around here, right? Or let's try this one. It broke around here. Just drag it to the top key point right here, right? Yeah, I would say this one. This leg gave it the push up. So just grab it from the bottom if you're going long and put it to the top. And then we just drag it to the side a little bit and see. But yes, you see right here, this leg was the one that gave it a push up, but it did not hit the 70. But if you have another thing like 68.5 or something like that, or even if you're keeping a close eye on it and you believe that because of this rejection, it made this not come down anymore to hit the 70, you could even got in a position right here, just a stop below this red candle. Just a simple eye test trade, what you see, right? Because it rejected right here, again, I'm gonna say it again, because these candles came down, it didn't hit the 70, but if you kept a close eye on it, what did it do? It came back, test this support. It didn't come fully to test this support right here, but it tested the wick that this wick gave, but it didn't pass through it. So as soon as it hit it, it just continued on an up position. So if you're looking at it and you see that, well, it didn't come down to the 70, but you know, I see it here trying to reject something and rejecting the wick, you could have just simply got in with a long position here, with a stop right here, or even under this wick right here, this wick right here. Yeah, I know it's a long stop with 132 stop loss, but hey, we're on the 4 hour. And then you can just target, you know, first take profit, second take profit, third take profit, and then move on from there. And if you were in this trade and you did exactly what I said, you looked at this, this would have been right here. Look at the risk to reward ratio. Boom. Good trade. But yeah, so that's just a quick breakdown of GBPJPY, how to trade a pair, how to analyze a pair. And we'll see what's gonna go on when the market opens up from here. And that's it. That's all I got for y'all. Have a blessed weekend. Bye.